Ladies and gentlemen, good day, and welcome to the Amanta Healthcare Q4 FY26 earnings conference call hosted by Go India Advisors. As a reminder, all participant lines will remain in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star, then 0 on your touchtone telephone. Please note that this conference is being recorded. I will now hand the conference over to Ms. Soumya Chachai from Go India Advisors for opening remarks. Thank you, and over to you.
Good day, everyone, and welcome to Q4 and FY26 earnings conference Concall of Amanta Healthcare Limited. We have on call with us Mr. Bhavesh Patel, Chairman and Managing Director, Mr. Paras Mehta, Chief Financial Officer. We must remind you that discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks pertaining to the business. I now request the management to take us through the same and provide some more insight on the quarter gone by. Post that, we will open the floor for Q&A. Thank you, and over to you, sir.
Good afternoon, everyone, and thank you for joining us today for Amanta Healthcare's Q4 and FY26 earnings call. On behalf of the entire management team, I would like to extend my sincere appreciation to our shareholders, customers, healthcare partners, lenders, and employees for their continued trust and support throughout the year. FY26 has been a year of disciplined execution and meaningful progress for Amanta Healthcare. While the operating environment across the pharma industry continued to remain competitive, we stayed focused on strengthening our core business, improving profitability, enhancing operational efficiencies, and preparing the company for its next phase of growth. During the year, we are delighted to report revenue of INR 288 crore and EBITDA of 63 crore, while maintaining the EBITDA margin at around 22%. More importantly, our profitability improved significantly, with PAT growing by over 42% year-on-year, supported by better operating leverage and meaningful reduction in finance cost. What gives us confidence going forward is not just the financial performance of the last year, but the strong strategic foundation we are building across manufacturing operations, product portfolio, and cost efficiency. Our SteriPort platform, a product that continues to gain strong traction in the market, contributes nearly 42% of the revenue from operations. Built on advanced ISBM technology, SteriPort offers superior sterilization, significantly lower contamination risk, and it has other attributes like transparency and drug compatibility. With utilization levels remaining healthy, we are now expanding capacity from 6.6 crore bottles per year to roughly 12 crore bottles per year. This is mainly to capture the growing market, I would say sub-market of IV fluid, which is two-port system. This kind of closed container systems are preferred in therapies like oncology, critical care, pediatricians, and anesthesists. The upcoming expansion is expected to meaningfully improve scale and operating leverage over coming years. At the same time, we are also strengthening our SVB portfolio, particularly in inhalation solution and preservative-free ophthalmics. These are high-value segments, and they contribute nearly 20% of our SVP revenue in year 26. Our focus remains on building a more specialized and differentiated product mix that supports suitable margin improvement. Another important milestone during the year has been the strengthening of our balance sheet. Over the last 3 years, we have significantly reduced leverage, with our debt-to-equity ratio improving from 3x to nearly 1x today. This reflects our commitment towards maintaining financial discipline while continuing to invest for long-term growth. We are also taking structural steps to improve competitiveness through energy efficiency and cost optimization. Our 10.8 megawatt captive solar power project, which is under implementation, is expected to reduce power costs meaningfully from year 27 onwards, while also strengthening our ESG profile. This project is about to get commissioned in 5 to 6 days. From market perspective, we continue to deepen our domestic branded business while expanding our international presence across emerging and semi-regulated markets. In parallel, we are working towards selective entry into regulated markets through product registrations and portfolio expansion. We already have significant presence in UK for more than 2 decades now. As we move into 27, our priorities remain very clear. 1, enhancing regulatory approvals. 2, developing a product pipeline. At the moment, we have 20 products in pipeline. Expanding export opportunities. This will be a combination of both advanced markets and semi-regulated markets. Driving operational efficiencies. Solar is one, and likewise, there are many other initiatives which are planned in year 27. And maintaining financial prudence while executing our growth capex. With our differentiated manufacturing technologies, established presence in sterile liquids, expanding product pipeline, and ongoing capacity addition, we believe Amanta Healthcare is well positioned for the next phase of growth. Before I conclude, I would once again like to thank everyone whose commitment and support continue to drive the company forward. I will now request our CFO, Shri Paras Mehta, to walk you through the financials. Over to you, Paras.
Thank you, sir. And a very good afternoon to all. During the quarter and full year ended March 26, the company has delivered consistent and improving financial performance, reflecting a disciplined execution and a sustained focus on the profitability. For the quarter, March 26, revenue stood at about 77 crore, registering a 6.8% growth on compared to the previous quarter on year-on-year basis, which is driven by the steady demand as well as the price and volume-led expansion. Just to remind the investors that company is yet to get the benefit of expansion in terms of top line and bottom line. Our project is going to be commissioned by next month. So on the same capacity what we were having last year, we are able to register a decent growth. It speaks about our resilience and the levels. So for the financial year 26, revenue on full year basis has grown to 288 crore, up by about 5% on annualized basis, depicting the resilience of our core portfolio as well as consistency of our operating model. Further to that, operational discipline continued to support our margins. EBITDA for financial year 26 on full year basis is 63 crore with stable margin of about 22% EBITDA margin, which reflects effective cost control as well as improved absorption of fixed overheads. Profitability has strengthened meaningfully during the period. Net profit for the quarter 4 increased to 5.5 crore, up by 28% on year-to-year basis. This is one of the best quarter we have witnessed in terms of profitability improvement. While full year 2026 PAT has grown to 42% year-on-year basis. Now, with this result, we have 15 crore annualized PAT as compared to 10.5 crore last year. This demonstrates the benefit of operating leverage, which is flowing through the bottom line. Earning quality has also improved, as reflected in the margin expansion. PAT margin for quarter 4 stood at 7%, while full year 26 PAT margin expanded by 100 basis points on year-on-year basis to 5%, supported by scale efficiencies and margin normalization. Overall, the financial performance for the quarter and full year reinforces our confidence in the business fundamentals. We remain focused on sustaining margins, improving return ratios, and maintaining a disciplined balance sheet as we look ahead for the next phase of growth, led by the expansion of the product portfolio as well as the expansion of capacity. Thank you, and we will now open the session for Q&A.
Thank you.
Thanks again.
Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use their handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen who wish to ask a question, please press star and one. We take the first question from the line of Akash Jain from MoneyCurve Analytics. Please go ahead.
Yeah, thank you so much, sir. Just one request, sir. This time the results and investor presentation came just minutes before the investor call. So we were not able to really analyze the results before this call. So next time I'll request you to please keep some gap between the results and the con call, because otherwise we are basically coming blind into this call.
Sure. No, point well taken.
Yeah. So maybe so couple of questions are here. One is basically on your raw material side, sir. We obviously know that the raw materials you use have had both challenges both on the supply side as well as on the pricing side, right? The price for all crude-based products have gone up, and even the supply has been a challenge. So how are we managing both on the price and the supply side this challenge? And from a margin perspective, how does it impact in this quarter and going forward? Because we may have some inventory, so this quarter we may have been able to tide over. But how do you see the impact on gross margins going forward? And obviously the impact on the pricing and supply side constraints if there are any in the business, especially now that you are going to expand, sir, you will need more quantity of raw material. So that is from that perspective I want to understand. And the second, sir, clearly our Steripod product is a more value-add product, but slightly more expensive than the other products that are available in the market. So in a scenario where the prices have gone up so much, do you see a challenge in terms of people or hospitals downgrading to a cheaper product instead of Steripod? I just wanted to get your views on that as well.
So I will answer the first question. The plastic prices have gone up, and this is impacting almost every aspect of our life, right from FMCG products to pharmaceutical. Our objective in such situation is first to secure the supplies. We don't want to have no production days. Usually we keep 3 months buffer. At the moment we keep 4 months buffer. The good part for us is that the material that we use comes from Far East, mainly South Korea. Some of the grades they come from Norway and Germany. So they are not really impacted in terms of logistics because of the Middle Eastern crisis. But because the gas prices have gone up, the polymer prices have gone up by roughly 60 to 70%. We have already revised our prices, and we don't envisage any resistance. The total impact could be around 2 rupees per bottle in Steripod. The second part of my answer will also partly address your second question. The polyethylene prices are more volatile, and the gross consumption of plastic in polyethylene container is even more than what we consume in Steripod. So that sub-segment is more impacted by the price increase. And third thing is, which is more important, that now earlier we used to find Steripod being used by oncologists, pediatricians, anesthetists, intensivists. But now even small and mid-sized nursing homes also use two-port systems. So 2 rupee increase in price will not move the needle much, in my opinion. And we have not encountered any resistance so far. We initiated a price revision, I think 20-25 days back, and there is no resistance so far. And this has happened in the past also. There have been many instances where the polymer prices have moved by, not for such reason, but for other industry microdynamics triggered reasons, where the prices have moved from $1,100 to $2,400. And we pass on this in totality, and the market accepts it.
Is there an element of inventory gains in this quarter, sir? And once things stabilize, there will obviously be a price decline as well. So will at that time we also have a situation where will be an inventory loss for us because of the 3 or 4 months inventory we are carrying?
So whenever there is any movement, there is a lag of some sort. So when the prices went up in terms of the raw material prices went up, we revised the prices, whereas still holding the PM inventory of older rate. Likewise, when the prices come down, the market would expect you to reduce the prices to an extent. So there will be a lag or to that extent, but usually once the price go up by, say, let's say 2 rupees, they will not come down by 2 rupees. They will come down by, say, 75 paisa, 1 rupee, something like that. So, I mean,
this quarter, sir, we would have got benefited. This quarter, we would have got some benefit of having lower cost inventory and being able to revise the price upwards.
No, I think we will that benefit would be visible in Q1, not in Q4 of last year.
Oh. And sir, if I may ask a little bit on the expansion, I think you covered the fact that next month they will probably start commercial operations over there. So I just want to understand what is the status in terms of is all machines installed, trial production, is that going on? How confident we are that we will be able to stabilize things and start commercial production and start generating revenues by in a month's time from now?
So at the moment there are 2 initiatives. One is solar, which is a substantial, a cost-saving initiative. So that I think will save roughly 75 lakh rupees a month. So we got the connections done last week, and we are expecting meters to get installed in next 5 days or so. So by 25th May or maybe 30th May, we should start accruing the benefit of that at the rate of 75 lakh rupees a month. Coming to Steriport, all the equipments have been installed and stage-wise commissioning has been completed. The engineers from Italy, they were at the site for more than a month. We have taken the trials. Some minor fine-tuning is being done. The utilities have been commissioned. So the final mopping of operation is going on right now in terms of finishing. That would take another 10 to 15 days. So we'll have another stage 2 trial by 5th June or so. And thereafter we'll do qualification, validation, etc., which may take another 15 days. So we are hopeful that by 20th June we should be able to get operational.
And sir, we don't need any client, for example, pharma mein to we usually see a situation where there is a lot of client level or regulator level audit here. Here, what is the situation, sir? Do you see, for example, if UK is a large customer or if Indian hospitals are a large customer, do you see any sort of need for a client or a regulator approval for the line, or that is not required in our business?
So not for Steriport particularly, but like for in last 20 days, we had 3 inspections. One from a company, customer for product partnering, and 2 for countries, Zimbabwe and Peru. And both were successfully completed. So audit is an ongoing feature of facility, as you know. And Steriport line 3, we have already got the plan approved by state FDA because we hold the valid license. So if you have valid license, you need to get the approval from state FDA. So once the line is commissioned fully, then inspectors from state FDA will come and they'll inspect if everything is as per the proposed plan or not, and that's about it. That's a matter of 1 week or so. But this we will start parallelly with validation. So typically validation, qualification and regulatory approval, they go parallelly.
Okay. Thank you so much, sir. I'll join the queue again. Thank you.
Thanks, Akashji.
Thank you. We take the next question from the line of Rishabh Shah from RBSA Investment Managers. Please go ahead.
Yeah, thank you for the opportunity. I just want to understand, sir, I believe that one of our suppliers, which is into caps, they are also forward integrating into LVPs. So I just want to get a sense, how do you see this demand supply scenario playing out in LLPs, and maybe they can also fall into other products. So how do you see this scenario over the medium term and your impact on margins on the?
So, IV fluid consumption in India is growing at roughly 8 to 10% year on year. So at this moment, the demand we can estimate around 185 crore or so per year, and it's growing at around 8 to 10%. So every year you have incremental demand of 12 to 15 crore bottles. So the demand function is very strong. This growth rate will continue till we reach probably 250 to 270 crore bottles capacity, and then it may taper down to 6 to 7% growth. In terms of ml, the advanced markets like US, Europe, etc., they consume 3.5 liters per capita of IV fluid. India remains around 1.2 liters. Now, for the demographics of India, we can probably negate 25% population. Still, there is a huge room for growth. The major growth drivers will be insurance and healthcare financial cover penetration, healthcare infrastructure like hospital, bed capacity, and so on and so forth, and increasing per capita income, which triggers propensity to spend on healthcare. So the demand side will be quite robust. And I would say the two-port system, if the IV fluid demand is growing at around, say, 8%, the two-port system will grow at 12 to 13%, because there is conversion happening from conventional pack to two-port system. In my personal experience, earlier I used to find Steriport and two-port systems in major hospitals and certain critical areas like on-call treatment, pediatrician, intensives, etc. Now even nursing homes are using two-port system because they are used to it now. So for them, 6 to 10 rupees of extra cost doesn't matter, because they charge around anything from 500 to 1500 rupees for administration of one bottle. So we have not experienced that kind of price sensitivity in a two-port system. So competition is always going to be there, but so that's about it.
So just a clarification on the two-port system, do you anticipate some supply coming from a competition in the 1 or 2 years, or will be the, I think, largest player for this foreseeable future in the two-port system?
So when we launched Steriport, we were the segment creators. And then, so at that stage, you have 100% market share, which eventually came down to 50%. What we believe is that right now the total demand of Steriport is around 20 to 25 crore bottles, which is growing faster than the average growth rate of IV fluid. By 2030, this demand should grow to roughly 75 to 80 crore bottles. And we envisage to have around 20 to 25% market share. Because targeting higher market share in generic space doesn't make sense. Even if you attain 40% market share for a year or two, it's economically not viable to sustain it for a long time. So in our internal calculus, we will not aim for 20 to 25% market share of two-port system.
Okay, sir. Thank you.
Thank you.
Thank you. We take the next question from the line of Aniket Nikum from ABN Capital. Please go ahead.
Thanks for the opportunity and congratulations on your continued progress in your journey, sir.
Thank you.
My first question is more broader. If you can highlight, what are some initiatives that you and maybe the rest of the industry are doing to help drive people or educate them towards the two-port system?
So at industry level, I think Otsuka and B. Brown are two companies who are putting some efforts in some markets, though, along with Steriport. But we had extensive campaign right from beginning. For instance, we worked on two fronts. One is we worked together with a university, their pharmaceutical and engineering department. And we had a very extensive protocol for testing the product right from its transparency to the impact it can take, to the strength, tensile strength, conductivity, how the container behaves under impact at 10 degrees centigrade, 5 degrees centigrade, and 0 degrees centigrade, because polypropylene is very a brittle material in that sense. So this is the simple physical properties. In stage 2, we had compatibility trials of most commonly used onco drugs, which are chemically very potent. They strongly react with the container, and we found that most onco injections, if they are compatible in a polyethylene container for say 1 hour, they are compatible with Steripod for 24 hours, 36 hours, 40 hours, 30 hours, and things like that. So these are the kind of studies we carried out in collaboration with university, and those reports with somewhere with videography, photographic evidence, records, everything, they're shared with the hospitals. And in process, we also engage with the nursing fraternity to educate them. Within nursing fraternity, there is a subgroup who are basically specially trained for intensive care units. So we had extended engagement with them also in the initial phase. So that's how the Steripod was launched. And since that's why I keep repeating that we have never felt that kind of resistance in terms of price differential that we maintain, because the product attributes are far more in terms of weightage.
Got it, sir. Got it. No, makes sense. Makes sense.
Yeah,
sir, if you can also tell us a little bit about your, I think you did a refinancing after the IPO, right? So if you can tell us what the previous cost of debt was and what it is now, and what we should expect finance costs to be in the next, next couple of years.
So, as you have seen, there is no capacity addition in year 25-26, and in spite of that, the EBITDA levels have been maintained, but our PAT has increased, and that is mainly because of financial cost. The finance cost has come down for 2 reasons. One is we have normal repayment, and secondly, we have replaced the debt with a cheaper debt. So I think today, I don't think we have, I think 90% borrowing is in single digit.
Yes.
So that has been the main focus for last 2 years. Our rating, CRISIL did the rating, and it has improved by 1 notch. It is BBB now, and we were not happy. We thought that we deserved a better rating, but they said that we cannot give you better rating till you are in a project implementation phase. Once that is completed, then we can review it and improve it. So that's where we are in terms of finance cost. And going forward, I believe that we should still be able to replace around 30 to 40 crore of debt with lower interest rate in next 6 months also.
So our current finance costs are 21 crores. So we can expect that to drop by half almost, like 10-12 crores.
The present numbers
because
are
we could also
slightly
repay debt, right? Because of the cash generation we will have.
Correct. I think the debt level that you're seeing in the closing numbers are slightly misguiding to this extent that we took debt from Bajaj Finance in the end of March, and that was to repay the other expensive debt, but that was done in the first week of April. So if you look at the balance sheet 26 March numbers, you will see the debt of 234 crore total debt. But as on today, while we are talking, it is 204 crore.
Okay. Got it. And so if it's single, understood.
Correct.
Understood, sir. Perfect. And sir, in terms of our capacity ramp up, that I think you had alluded last time also, but with our new capacity, we will go to full capacity utilization on day 1, right?
Yeah. So in our manufacturing process, the way it is, and our thesis is to operate full capacity. But we may not be able to liquidate at that rate right from the first month itself. So there would be some pile-up of inventory, which we have experienced in the past also. Whenever we have large-scale expansion, not producing is a costly proposition, so we tend to produce and hold inventory, because then we end up reducing the price also, which we don't like. So in first quarter, there could be some ramp-up of finished goods. In 3 to 4 months, we will reach the equilibrium where what you produce is sold, and thereafter there is reduction in the inventory level. So this typically 9 months to 10 month cycle.
Got it, sir. And therefore, I see in your presentation you've guided for EBITDA margin of 25 plus. We are at 22 now. So as this capacity gets fully sold out, that's when we expect we will reach that? That's the representative?
Yeah, that would be a fair assessment.
Perfect, sir. Thanks so much and wish you all the best.
Thank you very much.
Thank you. Participants who wish to ask a question, please press star and 1. We take the next question from the line of Avnish Burman from Vicaria Investment Management. Please go ahead.
Yeah, hi. Good evening. Thanks for taking my question. Sir, I don't know whether this was covered earlier or not. I joined a little bit late. But I wanted some color on, how the polypropylene prices have moved. And you can take a reference from, let's say, an average price of FY25 and how is it now? What kind of percentage increases have you seen there?
So we discussed this in the very first question. This question is on the top of the mind of almost everyone, but I will repeat that. Not only polypropylene, all the polymer prices have gone up. We are witnessing roughly 60 to 70% increase in input cost, both the grades, polyethylene and polypropylene. And the impact per container would vary from roughly 1 rupee 25 paisa to 1 rupee 75 paisa. And to that effect, we have made necessary correction in our selling price also. So as far as we are concerned, we should be by and large neutral.
Okay. Generally, when dealing with hospitals or nursing homes, I mean, usually you, how are the contracts structured? Are they like yearly contracts and they don't allow you price increases within the year? Or the moment when the raw material prices have been so materially increased, they allow these kind of price hikes in the middle of the contract life also? How does that happen?
So in Indian context, the contracts typically tend to be one-sided. If we enter into a contract with a hospital chain like say Apollo, if it favors them, then they will trigger all the covenants. But if it is working against them, then probably they would stop buying from you. So it is pretty much one-sided, and therefore we have never ever entered into any contract with any hospital chain. To the extent that we generally refrain from participating in government tenders also. But there are few government tenders where the description is very specific. It talks about Steriport features. Sometimes it mentions Steriport. That's where we bid.
So, do you mean to say that you... Hello?
Yeah, can you repeat? We lost the connection for a while.
Yeah. No, I was trying to understand that this 1.25, 1.75 rupees increase, have you been able to take on an immediate basis? Is that what you mean?
Yes.
Okay, great. And what percentage is this increase in percentage terms? You've given an absolute number, which is always better, but in percentage terms, what would that be?
Percentage of what denominator? The cost or the selling price?
The selling price.
Selling price would vary from field volume to field volume. So if it's 1 divided by... So for 100 ml content, it could be roughly 5.5 to 6%.
Okay. So about 5 to 6% price increase will take care of the entire 60 to 70% increase in input cost. That's the message.
Yeah, but the other cost has also gone up. Power interestingly has come down, energy cost because of solar. But our packaging cost, corrugated boxes, polyethylene films, transportation, everything is going up. So our price correction would be slightly more than that.
Okay. I mean, your price increase will be more. So is it safe
Yes.
to assume that, let's say, your gross margins will have no impact of whatever is happening because of the Middle East conflict? Whatever cost increase the business is seeing, your gross margins will not be impacted. Is that a fair statement?
Yes. Yes.
Okay. Thank you so much. I'll get back in the queue.
Thank you.
Thank you. We take the next question from the line of Dhairya Trivedi from DJT Investments. Please go ahead.
Hi, sir. Thanks for taking my question. So, sir, given that we are commissioning our Steriport line towards the end of June, we'll get 3 full quarters in financial year 27 for the Steriport line, right?
Yes.
Okay. So if you're assuming, say, 110 crores for the full year for Steriport, for 3 quarters, is it fair to assume that we'll do a top line, an additional top line of 80 to 85 crores just from the Steriport line?
Yes, yes, absolutely. So our endeavor would be to get operational by 20th June, because the machine trials have been completed last week, and all other systems they have already been integrated. Now, the mopping of operation of cleaning and validation, et cetera, is going on, and we are keeping margin of around 10 days in that also. So what looks to be a final date on paper, like 10th May, we are assuming that 10 days buffer would be wiser. So from 20th June, we are hoping to be operational. So
Okay.
we should get three full quarters.
Got it. So roughly 80 to 85 crores from Steriport in year 1, and the full
Yes.
impact of the 110, 120 crores will be visible in year 2.
Yes. And in that next year, we'll have SVP also.
Right. Perfect. Got it. And the EBITDA margin for Steriport, sir, safe to assume 26-27% just for Steriport?
Yes.
Okay.
Yeah.
And even the additional capacity will operate at 92% utilization, right?
Yeah. So, our capacity calculation is such that, we normally in BFS, we assume 24 hours of operating hours. In Steriport ISBM, because of the process characteristic, we assume 20 hours of operating hours. So there is enough buffer for that, and we will be running at 95 to 100% capacity from day one.
Okay, great, sir. Thank you, and all the best.
Thank you. Thank you very much.
Thank you. We take the next question from the line of Nupur from Earth Growth Fund. Please go ahead.
Hello.
Yeah, hello.
Am I audible?
Yes, you are.
Okay. So firstly, congratulations to the management for maintaining consistency in the results, and thanks for the opportunity. So firstly, just want to understand one thing, that from June onwards, as we are adding Steriport in our product portfolio, and definitely it's going to expand our top line. So just want to understand about the bifurcation in the margins, as it's a value-added product. So typically, what margins will be enjoyed on this product, and what margins will be maintained on the ongoing products in our portfolio?
Paras, you wanted this?
Yeah. So in current existing portfolio, on a overall basis, all product mix at company level, we are at 22% margin currently, 22% EBITDA margin, which you can see from the results. The new product line is expected to have about 27% EBITDA margin only for Steriport. So combining the new and the existing, on an average basis, we will be expecting between 24 to 25% EBITDA margin going forward.
Okay. So this 24 to 25% EBITDA margin that we are expecting are sustainable in the long run, and what PAT margins are we expecting? Like currently, we are having a PAT margin of 5%. So moving forward, as factory commissioning will be completed by the end of June, so expense in terms of depreciation will be added. There are other expenses as well. So whether PAT margin of 5% is sustainable in the long run?
So I think PAT margin of 5% is, it will improve disproportionately as compared to sales and EBITDA, because as the sales and, I mean, as the revenue grows, EBITDA will grow, but more importantly, there will be repayment of debt also. So the reduced financial cost will also have effect on that. So in my opinion, the way we see it, that will be growing disproportionately at a higher rate as compared to EBITDA and sales. Paras bhai, if you want to give more.
Yeah. So this 5% is sustainable. 5 to 6% is sustainable in the short term till we leverage it fully. Once we leverage in the current year, then going forward, it will be improving by at least 3%.
Okay. Okay. So, there was a call in Feb, and in the investor presentation, we have even mentioned about the ophthalmic, division. We are going to enter in that as well, and it's again a high value product. So, what margins are we expecting, and what will be our percentage or contribution of exports in our top line for FY27? And whether, if one more thing, if exports as a percent of sales improves in comparison to this financial year, how much margin expansion is expected?
Can you repeat your first question? I think there is overlapping.
I was asking about the ophthalmic division. We were planning to expand our product portfolio in ophthalmic. So just wanted to understand on those lines.
Yeah. So right now, ophthalmic is one of the smallest SBU or therapeutic segment, if I may say. I think 70 to 80% of the revenue comes from UK market.
Yes.
So ophthalmic would be primarily activity-centric initiative now because we don't need capex for that. We need to have new products developed. For example, in UK, they want preservative-free product in a classic pack. So that's being developed. Then the new SVP line that we are bringing, it can make minims, meaning single dose preservative-free, again for Indian market and advanced markets. So we are at the moment developing a product pipeline which is primarily revolving around inhalation portfolio and ophthalmic portfolio. And this will get commercialized in year 27-28. So the way I see it, SVP line will be commissioned in October, November or December this year. But in year 26-27, the major profit and EBITDA drivers would be coming from Steripod expansion and solar. Thereafter, the EBITDA growth will come from small volume and ophthalmic and inhalation would be the main therapeutic segments contributing to that. So, and that will depend on the product pipeline that we develop today. So right now we have 20 products in pipeline in these two categories.
Understood. So, just one last question. Have we made any changes in the receivable policy of our company? Because receivable as a percent of sales have improved for FY26 as compared to FY25?
So, as such, there is no change in the policy, but we could recover some old outstanding from the government as well as the export market. And as we are expanding for the new product, then some of the customers, we are encouraging them to pay earlier than the agreed payment terms to make more stable market after expansion of the facilities. So, because of the price volatility, because of this Iran, America and all these things, as we increase the prices, they keep on paying us a little early and book new orders with the existing prices rather than waiting for new prices. So that is helping us temporarily, and we expect that with new expansion of the product line, we will be improving our percentage outstanding to revenue at the current level. So we will sustain this.
Okay. So can you please help us with that what's our current working capital cycle, and moving forward, what working capital cycle will be there?
So our current working capital cycle is about 100 plus days. To be precise, it will be ranging between 120 to 125 days. and we expect it to go about 110 days in near future.
Understood. Okay, that was from my side. I'll join back the queue. Thank you.
Thank you. Participants who wish to ask a question, please press star and one. Ladies and gentlemen, in the interest of time and fairness to others, we request you to restrict to 2 questions per participant. We take the next question from the line of Nikhil Agarwal from Alpha AMC. Please go ahead.
Hello, sir. First of all, many congratulations for a great set of numbers. So my first question is, as we know that export orders are based on distributors' orders that we take from them. So I want to know about the average, the long-term order book we have for H1 FY27 at least.
I don't think we have an order book which spans over 1 year. These are the rolling orders, and they're cyclic in a way. For example, the East African market, their sizable purchases happen from September to March. In our case, export market, export numbers, they are always better in H2 than H1. Markets like Southeast Asia, they are pretty much consistent throughout the year. So we don't have order book position, but we have visibility of around 3 months to 6 months in some markets. That's how it is.
So can you quantify the visibility that you have for the next quarter at least?
At this moment, I don't have the number, but I can probably dig out the numbers and probably share with you separately.
Sure, sir. That would be great. So my second question is, we have recently completed 2 audits. One was Peru. I missed the other country. What was it?
Zimbabwe.
Okay, thank you, sir. That's it from my side.
All right.
Thank you. Ladies and gentlemen, we take the last question from the line of Saket Saurabh from Sagri Capital. Please go ahead.
Hey, am I audible?
Yes, you
please.
are.
Yeah, thanks for the opportunity and congratulations on a stable set. So, sir, last year our export share was 32%, FY25. What was the share for FY26? And what would we say the top 3 countries within exports, and what would be their share to overall exports?
So in year 25-26, our total export was around 39% of the revenue.
Okay, and top countries, sir, that are currently...
Top countries would include Thailand to some extent, UK, Philippines, then Sudan, South Sudan, and then various countries. So we are actively marketing products in 25 to 30 countries. So these are just top 5 countries that I can think of.
Sir, when you say, sir, 2-port system, then is Eurohead one of our competitors in terms of, two-port? Is that a fair assessment?
Eurolife or Eurohead?
The Eurohead, I think some companies talk about the Eurohead in some
yes.
of their, yeah, okay.
So Eurohead is a colloquial term. In regulatory framework, you will not come across anything like Eurohead, but they are pretty much similar to our 2-port system, Steriport. Because that was, so this is so I will tell you, NPPA has classified the container in 3 categories. One is glass bottle, second is plastic bottle. In plastic bottle, what are the special features and normal bottle? So old bottles that you see with nipple head without any rubber bung, without any port is a normal bottle. And special bottles, special category must have 2 features. One, it should have 2 ports, one for IV set, second for injection. That's the first attribute. Second is, it should be fully collapsible, meaning the last 20 ml also should be administered at the same flow rate. So whether we call Steriport, whether Eurohead of other companies, they all fall in the category of bottles with special features. But the difference starts beyond this point. Steriport has a polymer which can withstand 1.1 degrees centigrade and more. Whereas the Eurohead containers, which they call Eurohead, there is polyethylene. They cannot withstand temperature beyond 109 degrees centigrade. Secondly, Steriport is more transparent as compared to the PE bottle with hero head. So the transparency helps in contamination management, and the tensile strength of Steriport is way higher. We must have marketed more than 30 crore bottles so far. We have yet to receive a single complaint of fungal contamination. So the nursing homes and hospitals, they derive comfort because of this reliability.
Got it, sir. No, fantastic. So, sir, does NPPA say give a because if I'm not mistaken, they give different pricing for based on packaging. So, does Eurohead or Steriport get the same pricing, or there is a difference between these two as well? Because your product and all this. Okay.
No, there is no difference. Same pricing because both are having two-port system with collapsibility. So they have to develop that, they have to demonstrate that the container are collapsible, that's all.
Okay, sir.
If they are fully collapsible, then they will also be able to claim the same price. But many companies who have Eurohead kind of offering, they have failed to get this NPPA classification because they can't demonstrate, they fail to demonstrate their collapsibility.
Okay, sir. Okay. So you talked about that, because of the one-sided nature of the contract, change, you don't get into, long-term contracts with them. So if I look at, say, today, say, domestic sales, what percentage of your top line comes from, say, these large corporate chains, the Apollos, Vedantas, and, say, Maxes of the world, and how much from, say, standalone hospitals or nursing homes, sir?
So, we are traditionally very strong in certain sub-segments like pediatrician, oncology, intensivist, cardiac intensive units, etc., etc. And if you say Apollo, then they would be buying our Steriport as well as our conventional bottle, blow-fill bottle. So it is very, very difficult for us to exactly quantify that how much quantity went to Apollo, how much quantity of Steriport went to Apollo. So if through our channel partners data, we can say that, okay, Apollo network bought these many bottles, but out of which Steriport was what component, etc. It's very difficult. But as I said, we don't go by the size. We focus more on therapeutic subsegment because that's where I see the traction.
Got it, sir. But given the kind of specialty that you just enumerated, oncology, pediatrician, intensive, these are usually based out of some supercritical or say quaternary care hospitals only. So would it be fair that most of the sales would be coming from these corporate chains only? Is that a fair statement?
No.
You think? Okay.
No, there are many standalone practitioners who are pediatricians, who are ophthalmologists. Ophthalmologists, they will also use our product. Intensivist. So it goes to both. I think it goes across all. Like for example, Tata Cancer, Holy Spirit in Delhi, then Gujarat here cancer. So there is a civil hospital Ahmedabad which has almost all the departments, but the cancer department, they have their own tender. So they ask for Steriport, but other departments, they don't specify. So likewise.
Got it, sir. And sir, do we sell all our products under our brand, or we do also do say some CDMO or contract manufacturing for say other players?
Contract manufacturing must be around 8 to 10% of our revenue, and in terms of percentage, it may further reduce because Steriport will expand. So contract manufacturing is very dear to us because it gives us very good exposure to varied requirements. So we will always keep doing contract manufacturing, but it would be in single digit from henceforth.
And mostly it is within Steriport or other segment when you do because Steriport is more advanced. So because as you told, contract manufacturing helps you remain ahead of the curve, and you might be doing it more for two-port system. Is that a fair assessment?
No, it is across all the packaging variants. We do Steriport also. We do classic BFS pack also. We do in SVP also, ophthalmic, inhalation, everywhere.
Okay, sir. Thanks, sir, and I really appreciate you answering the question so patiently, and best of luck for the coming quarter, sir.
Thank you very much.
Thank you. Ladies and gentlemen, with that, we conclude the question and answer session. I now hand the conference over to the management for their closing comments.
So once again, thank you very much, Go India team and all the investors, analysts, and all of you who have taken your time out. And thank you very much, and looking forward to have more of this kind of interactions. And that's about it from my side, Parashbhai.
Thank you all. As there was a shortage of time, you could not see the result before and analyze it before the call, but as it was already out, we have also uploaded our updated investor presentation deck on the site, so you can go through all these things, and going forward, we will have a sufficient time between. And thanks for today's call, and we look forward to your active participation going forward. Thank you again.
Thank you. On behalf of Go India Advisors, that concludes this conference call. Thank you for joining us, and you may now disconnect your line.